What is going on, option traders? Hopefully soon to be option traders. My name is Bo Crable, the founder at optionscout.com. And in this video, I want to talk about why the Greeks are actually not on my top priority list when I'm, looking to make option trades, and why there's a bunch of other factors involved, such as strategy and other metrics like implied volatility or events in the market, all these different things. And then, the Greeks are on the list as well, but not on the top priority. So if you're a newbie, a beginner into options trading, you want to make money with options, and you don't know where to start, well, hopefully this can help you out. So let's start off by, again, giving an introduction on the Greeks. So the Greeks, all what they really are, it's just a few metrics you can look at, and it's going to how you can understand how the option price will change. Now, you can learn the math yourself, or you can just learn, use a software like an Option Scout. We have one for free where you can kind of visualize that. But just understand that's the only purpose behind it, is that the Greeks are there so you can understand what makes up the price of the option and what will make up the future price of the option, right? So that's just kind of like it's there, all right. However, this is what I try to think about when I'm trading options. So first off, the first thing I want to think about is the strategy. So what strategy am I going to implement? Am I really bullish onto the market right now? So am I going to buy like a long call option? This is actually, I did this in October of 2021 when I saw Bitcoin like just smash down to 30 grand. So I bought call options onto Coinbase, and that worked out really well. Bought some really cheap options, and my decision making into that went for a couple reasons. One, the stock went down a lot. I thought it got oversold. Okay, and then another thing is I saw the implied volatility also got really low. Usually when a stock does go down in value, implied volatility does go up. So I found it very interesting that implied volatility was not going up. So I was like, okay, this is like really undervalued. So that's kind of the next thing I'm going to look at is volatility. All right, what's the volatility of the current market, and what's the volatility of this current stock? And that's important to understand, because if volatility is really high, and it's like the highest it's ever been, your odds and your risk are much higher, or actually your risk is much higher for an options buyer, or compared in times of that. So that's the first thing. I think of strategy, implied volatility, and then I'm going to think about also myself as a whole. So I think this is where a lot of traders kind of forget a little bit, is ask yourself the question like, am I a long-term investor? Am I a swing trader? Am I a day trader? Do I like to time the market? Do I not? And you want to ask yourself these questions, and also what are your goals in mind? Like, are you just wanting to make some extra money? Are you wanting to make quick money? Like, you just need some cash to pay for things, right? And you have a little bit of cash, and you want to you don't necessarily want to invest that for the long term because you want to get cash now. Like, what's your goals behind that? Because then you want to ask yourself the question, okay, I have $5,000, and I want to make some extra income, but I don't really want to just have this money sit there. Well, then, okay, doing income trading is a really smart thing to do. So you could look into credit spreads. You could look into, doing covered calls or cash to care puts and things like that. So that's the next layer behind it. So then what I start to ask myself is, okay, I know my strategy. I can understand a little bit of the market right now. I know what direction I want to go towards, what are my goals and things like that. Then I start to ask myself, okay, what are some stocks I want to do this on? And that's also going to relate quite a bit to what's your strategy. If you're someone who's just, I'm going to day trade, I'm going to, get in and out of the markets, I'm going to play the volatilities, I'm going to look at the metrics, all this stuff, then you're not going to necessarily care what stock to do this on. You're going to look at, the stock that has the best metrics for that. If it's for, if you really want to play implied volatility, then, you're going to look for, the highest implied volatility stocks, which is a reason why you should hit the like button and subscribe, because at Option Scout, we're going to be coming out with some stuff where you can kind of filter out with volatility. But anyhow, so that's why it's important, okay? But now let's say you're a long-term investor, you're like, okay, I'm not really looking for that stuff. So now you're going to do this on stocks that you believe in or really don't believe in too, right? Like, let's say you're a really huge anti-crypto person. Well, then maybe you want to sell, naked calls or short call spreads on, crypto companies. Like, I don't know, or maybe it's the reverse. You're really bullish on crypto, so maybe you want to buy some leaps for that, right? So then that goes into like what stocks are you picking? Then like, let's say you're somebody who is really risk adverse, right? Now, if you're really risk adverse and you're very conservative and you want to have a really high chance of success, well, then that's going to play into what stocks you pick. So for example, it would be better off you, let's say, doing covered calls or doing the wheel strategy on Microsoft than on, let's say, I don't know, Tattooed Chef if you're very conservative. Where like with Microsoft, you'll make less income, but you actually might end up making more money because it's a much more, safer stock. It's one of the two stocks that have a higher credit rating than the U.S. government. So that's where it starts to figure out. Or maybe you're just trying to get the most amount of income as possible. Then maybe you're going to want to look at some, stocks like Palantir or Coinbase or, other high volatility stocks. And then from there, then you can start to think of the Greeks. But I don't look at them. Like when I'm going to make a trade, I'm not looking at the theta. I'm not looking at the vega and the gamma and the rho and all of these things. And I also don't look at the delta. Now, the reason why I don't look at delta and gamma is because of the fact that I have software that I can use that help me resolve. Because the reason why you're going to look at delta is because of probability. So delta is roughly the probability. So a delta that is 0.5, it means it's roughly 50% chance of success. Now, if a delta has 0.1, that means it has a 10% chance of being profitable or being in the money, actually. But it's still not fully accurate. There's a few methods behind it. My, company, we do those calculations for you. But yeah, that's why, Greeks are not that important. Now, it's good to, I don't know, it's like a geeky side to it, right? Like when you're getting into options, I don't really like talking about the Greeks too much because I know when I got into options trading, I just found it cool that I could make money through this, and then I could have lower risk than just buying stock. I found it so cool that, I first got into options by cover calls and selling puts on Tesla. I had a portfolio of Tesla stock and I was holding on to it, all these things. I thought it was cool that I could collect some income while I had my Tesla position and everything like that. I thought that was cool. I didn't even know what delta gamma, I didn't know that stuff. I was just looking at the strike prices and looking at, the premium and collecting and doing all that stuff and the money I can make. So that's why I'm it's like techno babble, right? It's just a bunch of nonsense of some of the stuff that traders get into. And I think that kind of maybe discourages a lot of traders. It's okay, I need to understand what gamma is. You don't need to understand what gamma is. You don't need to understand what vega is. You don't need to understand what theta is or rho. You actually don't. To actually make money with options trading, I don't think you need to care about what rho is about. You should spend that time learning about different strategies. This actually would help me out quite a bit. I wish I would have learned about, credit spreads as I was really geeking out about cash secured puts because I can collect income from it rather than learning about, the delta and the gamma and the theta. Or also I wish I would have learned okay, I should be very cautious around earning dates. That would have saved me a lot more money rather than learning about the Greeks. So this is not to be talking bad about the Greeks. That's the weird thing to do. It's just, what's important, and that's what I'm trying to really talk about in this channel. What is the actual no nonsense stuff you need to know about? At the end of the day, you're wanting to make money or enhance your portfolio or lower the risk in your portfolio. You don't need to understand about the Greeks to do that. Well, let's take this for example, right? So let's get into Option Scout right now. Let's just say I have a bunch of strategies here. And let's say your strategy is a long put. Okay, well, for a long put, I don't really need to know about the Greeks. What I really need to do is, let's say I own Snapchat stock, or let's say I'm bearish on Snapchat. What I'm going to do is I'm going to pull up an options chain, and I'm going to look at this. I'm okay, well, I'm not going to be that crazy and just going to buy a weekly option. I'm going to go, several months out because, I'm really bearish on the stock and I think the stock could go to $5. I think it can go to $5. So I'm going to go buy. And I'm not saying this, I'm just using theoretical, hypothetical examples. So I click 9. So now I can visualize my profits. Okay, so this is my max loss. My max profit is $811. That obviously goes down to 0. Probability is 32%. Then let's go switch over to the stock data. We can look at a trading view chart and I can view it that way. So again, it's more about look, and I could be okay, is it possible? Well, it's trending down a lot, so maybe it does go to $5. I don't know, right? So yeah, that's just kind of what I'm talking about here. It's goal in mind first, strategy. Then you want to look at the things like implied volatility, this is a 93% chance. When's its earnings date? October 20th, right? So I probably definitely don't want to trade an option here or there. Or maybe you do. Maybe you want to do an earning play. So anyhow, hope that helps.